Welcome once again to this little old live installment, the 189th. Can you believe it? 189 of these. What's going on? It's good to see you guys. And who shoveled snow this weekend? I did. Who worked this weekend? I did too. But it's good to see you. I'm happy to be here with you. We'll talk some investing, stocks, news, look up things you may or may not be buying, questioning, finding opinions on. Remember, we don't give financial advice here because I'm a blue-collar dividend investor, just like all of you. No financial education, but we are on the cusp of being net worth millionaires. So that's something, but not as impressive as a portfolio millionaire, which is what we're really going for because, we have the kids' 529s wrapped up in that. We have, obviously, retirement accounts. That accounts, but we're not using that money right now. But still, all in all, to have when your assets and you subtract your liabilities to be 1 million, it's a good benchmark. Obviously, it's not the same as $1 million was 20 years ago because of inflation. But hey, we're here. And, I love it. You guys are talking weather. I don't want to be some people because I could just hear some people. Oh, I came here for the investing talk. I didn't come here for weather. I'll tune into the weather channel for that. But we're not the weather channel. We're talking investing. And I hope you like the newsletter that we dished out. I did start a new position, as you guys saw, and I'll sell it on a video sometime in the future. Kinsale Capital, ticker KNSL. Excess and surplus lines insurance, very niche, very unique. They'll cover the things that people, hey, somebody wants to have a alcoholic drone delivery business that also delivers fireworks to gas stations and, chemical plants. Hey, they'll do that. You're going to pay a lot of money to them to be insured, but they'll give you the insurance for that. So obviously I'm yeah, that's awesome, dude. Do not pass go. That's from Jim Carrey doing the Monopoly guy from Ace Ventura 2, When Nature Calls, is just awesome. And did you guys do shopping? Did you guys do parking? I saw that. Wouldn't that be fun? Some nutcase out there just loves Black Friday parking. Like, I go to all the stores. I just love parking. I get in the parking spot and then I go to the next parking spot. Really gets my rocks off. But if you did park and did Black Friday shopping, where did you go? Funny, I was just thinking about Target and Walmart. Isn't it crazy how on the earnings calls, Target is always like, we have all these problems. And then Walmart's like, we really don't have many problems right now. Our biggest problem is where are we going to put all this money we got? We got so much cash. We need to invest in wheelbarrows to carry all of our cash around. Where are we going to put it? So I think that's why we're seeing obviously weakness with Target, right? It's all about the future. I know when people say, what are we going to buy? What are we going to invest in? You can look where something's at today, and that's what we do a lot, but it's all about the future, and the future is unknown and unknowable. We don't know what's going to happen. Like I've been reading in this fantastic book, finally made the decision to get Thinking in Bets from the library by Annie Duke, and it's really cool. It kind of gets a little redundant. I don't know if any of you experience this when you read books, but I kind of get the flavor of what's in each chapter. And it feels like each chapter could maybe be about 3 pages long, not 30 pages. So, but hey, I get it. I've heard the publishers, they want to make books a certain number of pages. Tuesdays with Maury by Mitch Albom. I heard an interview with Mitch Albom, and he said that the way he wrote was very just to the point, cut out all the fat, and publishers would tell him, Mitch, this needs to be about 25% longer. It needs to be X amount of pages. And he would just say, no, it's as long as it needs to be. So a lot of his books are very short and people thank him for that. So got to go with Joe. I'm still looking at Kinsale Capital. Obviously there's 4,000 plus stocks out there we can invest in. I obviously don't know them all, but Josh, that's awesome. Support your local liquor stores because as you guys saw in the newsletter, and this is very apropos, Josh, that in Ireland, which I've been to once, is their culture is centered around drinking alcohol. It is ingrained. If you saw, I think it was Family Guy where they showed Ireland used to be scientists and chemists and very highly educated people. And then somebody came and invented Guinness or in alcohol, whatever it was, or whiskey, take your pick. And then all of a sudden, everybody just went to hell, and it was no longer the smartest place on earth. But so why do you want to start a new position? Is there anything wrong with your number 1, 2, or 3 positions that makes you not want to invest in them? We would love to know that. Yeah, and it's funny, I did talk about, I think that was Jason Fieber in his book. He said that he didn't want, he was from Michigan, the Detroit area, I believe, and he didn't want to shovel snow anymore. So picked Florida because he knew you can't shovel sunshine. So that's why we said that. And Steve, I guess it is 28 degrees. But yeah, back to Kinsale. I don't know if any of you have heard of it before, if any of you own it. That's why I said in the video, this is not going to be for dividend investors. And sure enough, somebody on X said it's a poor company because they have a 0.17% yield. And my initial thought was like, really? So NVIDIA is a poor company when it had less than a 0.05% dividend? You know what I'm getting at? So yes, and that's why I said for income investors, people in wealth preservation mode, this is probably not going to be an investment you're going to look at. But for people who have lots of years ahead of them, something like Kinsale, and you might wonder, why do they pay a 0.17% dividend yield? Well, they can easily afford it. They can increase it for many, many years. And as they start doing that, well, eventually some year, hey, all of a sudden they're a dividend aristocrat, right? And maybe as they get more mature and start having the problem of too much money, not knowing what to do with, then they can distribute more of it to shareholders. But they are an earnings call. Michael Kehoe, their CEO, said they're going to look at quicker dividend raises, which they're very fast, and buying back more shares. But a lot of companies, as soon as they pay a dividend, they can be included in certain indexes and ETFs, and they'll get more coverage by analysts and exposure to institutional investors and things like that. So I think it's an interesting foot in the door concept. But, you know, as I've talked to you guys about, I've missed out. Let me know. Let us know in the chat if you've missed out on some very, very, very good companies because they paid either no dividend or a very small dividend. I'd love to know that for my own fun and entertainment, which is what this is for. Loblaws, L.to. That sounds like a Canadian company, Mr. Lucas. So yeah, we'll put that on the list for Loblaws. Loblaws? Don't they do retail, grocery stores maybe? Or is it, I don't know what it is. Why don't I just stop speculating? We'll see what it is worth there. Alan, that's an interesting thing, and I know so let me finish that thought. I know that's an interesting thought, and my only question is, I guess, you know, I would just focus on the company more, because if it's dividend income, just why save the money? If you get paid a whole heap of a lot of money in January and you don't get another whole heap of money until, I don't know, March or April, just budget it. You don't have to blow it all, right? But I don't know. Do you guys do that? Do you find you want dividends paid every single month, or are you okay getting a bigger payment and then you can budget out and just save that? So on Wednesday at 1:00, Josh, right? The Federal Reserve, I know that I saw the breaking news. Trump said he already picked the next Fed chair. Who it's going to be, we'll see. Maybe they aggressively cut rates, take it to zero. I don't know what they're going to push for, but yeah, I think quarter point is what everybody's expecting. Would bring it down to what, 3.50 to 3.75%, I think is what it is. And hey, that's great for dividend investors, especially REITs, right? As the interest rate keeps falling, which the Fed controls the short-term rate, then that's going to make REITs and certain dividend-paying companies look a lot more attractive. Yield-hungry investors are not going to want that lower rate. And it's just, that's the problem, right? When we saw rates going way up and up, it just sucks a lot of money away from, especially the REIT world. And that's when I started my position in Agree Realty when it was in the 50s. There you go, Charles. Same thing, man. I did the same thing, looked at Amazon. I looked at how the Amazon people come to our house so much that I'm surprised if we don't get an Amazon delivery for a day. They're not doing a wellness check on my wife knocking at the door, asking if everything's okay. Hey, we didn't make a delivery to your house today. Is everything okay in there? You all feeling all right? Just a wellness check. But same thing, man. I didn't buy them because I looked and I was like, oh, they don't pay a dividend. Nope. Cross off the list. Next. So I guess that's the eternal question, and why it can be bad to paint yourself and label you put a label on yourself for anything, right? So, Lisa, what's up? What's going on, Lisa? What do we call you? The queen of stream. You're always streaming. Billy Black, what did you buy? Tom and Jerry Funko Pops. My daughter has those Funko Pops, which that's a publicly traded company, I believe, right? You should look them up just to see what they're doing. I think Funko Pop, or somebody owns them. I know there's a way to gain access to them in the stock market, and we'll find out what that is. Wait. Who the 5 choices are, and you have a good idea on what's going to happen. I don't remember what we were talking about already, Charles. Remember me. Oh, I got you. No, I don't. I don't remember what you're talking about. Exactly, Pat. Thank you. You budget it. And that's something that, again, and everybody's different, just my opinion, that if, hey, I received a massive payment every third month, well, just budget it. Just divide by 3 and don't spend more than that per month. But oh, Lucas, same thing. I had a conversation on the channel with our guy. We did a collaboration. It was with, I don't want to use his name, I had to think there, Citizen of the Year, Cody, right? And he shared Google. And I was going through all the old videos. I think Google was $84 when he shared it. And I look back and yeah, hindsight, right? Always 2020. But I was just like, they didn't pay a dividend. I remember thinking, yeah. And he did say they'll probably pay a dividend someday soon, or maybe it was when they first started. I don't know. Anyway, I don't want to put words in his mouth. Point being, Google was still about $80-something, and I just didn't do it again. Oh, Charles, the next Fed chair. Yeah, whatever. We don't have any control over it, so it will be who it will be, and we'll hope that they do the best that they could. We can look at pool address. I have not looked at it in a minute. I know Ryan did that in one of his videos, and you got to worry, if we are headed toward a recession, are people really going to be investing in pool supplies, pools, things like that? I suppose if you have the pool, you're going to need to maintain it. That's a great question, Jack. What's one stock you wish had a significant dividend? Well, Kinsale Capital, right? It's an interesting one. And I don't know, do you guys ever do this? I try my damnedest to look into companies like TJX, right? I've listened to a few of their earnings calls. I've leafed through a few of their annual reports, looked at their fundamentals. Very solid company, but I just kind of lose track of it when I don't own them. And I've thought of starting that position, but Kinsale has been on my radar for a little while. They got way overvalued. They were way too expensive, and now they've been dropping back down. to a more reasonable valuation. So that's why I started the position. And it's funny, once I own them, it's just that switch in my brain. Once I have that skin in the game, I got actual money in the company, I just feel way more compelled to look into what the heck they're doing and what's going on. So I hope you don't have I don't know. If anybody else, let me know if you... that sucks if I am, because everything looks good with me on my end. So, guys, I don't know. Hopefully the gremlins in the system. I mean, let me see my wife. No, I don't know. I look good here. I got my phone going there, but all right. Well, let me know, guys. I don't know. That's something like, hopefully not on my end, but you know what? Let's do some news. Maybe we'll... Yeah, I hate hearing that, but at least Steve doesn't have anything going on. But yeah, I'm looking... Sorry. Now I'm watching myself talk off to the side. What a weird thing we got going on here, but all right, well, hopefully it fixes, and I don't know what it could be because I have everything set up the same. I even restarted the freaking laptop, but all right, let's do news, and then hopefully this will recorrect itself. But I don't want to spend too much time on this technical glitch, but all right. Hey, Beak, what's up? I don't think you've dropped a comment before. I remember a lot of your avatars, which is a weird thing, but all right, let's do some news. We'll look up a couple of your stocks. Hopefully we're going to be all right. All right. Whoa, we're zoomed in. I got to give you more real estate, like usual. All right, what are we at here? Maybe we started here, November 25th, because we were talking about how Abbott bought Exact Sciences, which owns Cologuard, I guess the self-administered avoid the colonoscopy test, which is of interest, has not had that procedure. Something less invasive, less people. I just imagine getting the opinion of the assistant janitor coming in with a room full of people to, what do you think about this? You work with plumbing. Hormel raised their dividend. Speaking of food, 0.9% token raise. Yuck. But why is that dividend yield 5%? Let's look real quick. Just for my own protein inflation, dividends still supported. Let's just get a couple. This is, I know Ian likes Hormel, right? Ian's still buying Hormel. But when you have an 11% 10-year CAGR, then it drops to 6% 5 years, and now it's less than 1%. That worries me. Yeah, people get caught up. Dividend paying 59 years, 97 years of not missing a dividend payment. But yucky. And these numbers. It's good to look. You want to get the dividend yield, right? A good place to start, not the be all and all. When the yield is above the 5-year average and the forward price to earnings is below, but it could also be because a lot of yuck is going on. Yeah, last 12 months, the free cash flow payout ratio over 100%, and it's been trending up. Same with earnings, that's up. Free cash flow, you just don't. You just don't like to see this when the free cash flow per share, when you don't like to see it below, way below where it was 10 years ago, unless they're making significant investment. But it's because sales growth is down, earnings per share growth down, and revenue is flattened. So there's inflation, wages have gone up, everything is getting more expensive, but the sales, and this is why we talk about the money coming in the door is so freaking important, because if your sales are flat, it's going to be really hard to grow a dividend and grow a company when you have flat or declining sales. So you need consistently more money coming in the door, and they don't buy back shares lately. Yeah, margins are all compressed. This is Hormel, everybody. If you just jumped on Hormel Foods, bucket of yuck. At least their net debt is not. It's pretty low. That's like their only saving grace. But I wouldn't buy Hormel here. I think it's going to be a long time. Issues. Target got a dividend downgrade. Speaking of Target, because they have higher capex and tepid demand, but they reaffirm their dividend commitment. Yeah, well, what's the dividend reaffirmation going to get you? Affirmed it. And then HP, 3.7% dividend raise. I know they've had their issues. Never really dug into that one. And then lastly, Oracle, spending a lot of money on the AI build out, and they downgraded their dividend from 90 very safe to 80 safe. But I don't know. I posted about that one. Let's look up real quick for, I don't know if it'll come up here. LOB. There we go. Loblaw Companies Limited. We'll go with this one. So Lucas, they are unrated because they're Canadian. Yeah, hate it up there in the Great White North. Yeah, a small dividend yield, not a problem, but let's see if we grow it quick. Probably an old company, like a lot of things in Canada. 1919, yep. Yeah, fast dividend growth recently. All right, small yield, small payout, but they can low free cash flow payout ratio. Lucas, pause the video if you want to look at these 10-year trends. But free cash flow per share is expected to drop off. But, it's grocery. It's a staple. People need it. You're not going to be like NVIDIA. I would expect sales to keep going up into the right because they will increase their food prices with inflation. Nice that they're buying back shares. I don't know, margins just okay, not too bad. Just okay. Everything looks okay with them. And let's see what they say on Simply Safe. Not covered by the quant. And the analysts, as of late, Lucas, hold on. A lot of holds, sells. So there you go. It looks like a hold at worst and definitely not a buy. Can't even get any buy. The last analyst that gave it a buy was back in October of 23. And then next we got, I wanted to look up Funko. We'll start since we're here. Oh yeah, it is FNKO. Ta-da! Look at that. Doing god awful, down 73% in the past 10 years. We are, doesn't say, but 64% the past 5 years. Don't know if you are, gives it a hold. The quant does. There you go, Daniel Jones. I don't know if this is the same Daniel Jones that plays quarterback for the Indianapolis Colts, but if he is, he's moonlighting as a Seeking Alpha analyst. Daniel Jones gave Funko a strong buy on September. And then think about it. Look into some of this. It may be worth a free subscription to, or the free trial to Simply Say, all right, Seeking Alpha is where we're at, to read why he says no end to insight to the pain. So there you go, Funko. We'll just leave it at that. And then Dresh talked about Pool, which I had, gives it a sell. Look at that. And Pool, let's see if any reason why they say just from the headlines, but 5 years down 30%, 10 years though up 189%. So I guess it kind of got ahead of itself. It really started taking off during COVID, and then, geez, Louise, up to almost $600 a share. The analysts say long-term buy hidden behind near-term stagnation. You got some sells, because they are not recovering but stabilizing. All right, there you go. And then we'll just see real quick on, which gives a nice little flavor. See, like I'm faster bringing it with these, huh? Does anyone else own Pool Corp? Do you have any words to share about Pool? Which they look undervalued according to Simply Safe, but let me get a quick. When did they start? Doesn't say. See this. Everyone watching, this is Pool Corp, but this is always, always, always a concern of mine. When you see a 19% 10-year CAGR, 17% 5-year CAGR, and then a 4% dividend raise. When that dividend slows down, I get worried, I get nervous. And let's see if we can get a little bit of a clue as to why. So the market's telling you this is risky. Let's see, the free cash flow payout ratio. You know, I love it. Not anything crazy. I mean, it's pretty low. Free cash is dropping. Negative sales growth could be why. This is one of the negatives here. You got to see consistently. This is something that I have learned is when sales keep dropping, it's very difficult for a company to maintain growth of the dividend and growth of a stock price and the company if sales are dropping. It's just the nature of it. And they're buying back shares, which helps disguise a little bit of it. But yeah, their margins were really high and they're all compressing. They're still good, but their debt's still low. So again, a little bit of a saving grace there. But I don't know. Tough for me to figure that one out right now. But do any of you guys own? Let me know. Oh, Trevon, you like Hormel. Are you buying Hormel? Why? Tell us, please, right now. Yeah, Pool is just the glitch. Now, that was me doing a terrible. It was supposed to be kind of Scottish, kind of Irish, weird. If you guys haven't been to, I think it's Austin, Minnesota, they have the Spam Museum. You got to go if you like the Spam Museum. There's people walking around with plates of all kinds of Spam. I tried jalapeno flavored Spam. Dresh, I would not be surprised. Yeah, it was a token dividend raise. And those token raises remind me of somebody that's almost drowning and the water's up. It's almost over their face. And they're just given that raise just to keep the streak alive. And they're going to do like they did with that stinks. I'm afraid to move anything, but I don't know. Hold on. I don't know. I think everything's plugged in. Maybe. I don't know, guys. That bums me out. It really bums me out because I don't have the volume on. It wouldn't be right. I can't hear. I just hope it corrects. Yeah, you're welcome. Funko Bubble. My daughter has a few Funko Pops. What clue me in on that? I don't know what that means. Kevin, people are telling me I'm having audio issues. I don't know what it could be. See, now you guys got me wanting to play with everything, and I could make it worse. Yeah, I'll reset the router, but hey, I got in the habit of resetting after I had issues with the audio last time, and I reset so now before I go live, I reset the MacBook here. But yeah, SLB is that Schlumberger Vasco. Hopefully you can hear it, man. Yeah, we'll look up Schlumberger oil and gas, right? International Paper. Jack, I know there's been some problems with IP. We'll take a gander on them. The Dividend King MZTI. I don't know what MZTI is. Weird that I've never heard that. Labubu. I still don't know what Labubu is. I know the word. 3% dividend, MNSO. All right, guys. I'll try. Actually, before I do these, sitting on your end, when I'm going through these, is this useful for you to hear talk about these companies where I kind of do the Seeking Alpha quick look and then try to go quick enough through Simply Safe? Is that good? Is that a fast enough pace? I'd love to know, because obviously on my end, it's easy to just ramble on and keep talking, but obviously your time is valuable. I don't want to bore you. I want to do things that are useful and helpful to you. So I will jump into a few of those. And okay, you think it's good? It's good enough for me, Vasco. So without further ado, let's go jump into those, since we got 4 of them to do a quick peek on and see what we can dig up. Go for a crawl. Oh, here, one of the Campbell execs was recorded saying their soup was for poor people, and the chicken came from a 3D printer. I'd probably think he should be fired, quite honestly, or at least to issue a public apology, right? All right, we'll look up into MNSO, and I'm guessing it's Labubu. So without even looking, I'm drawing the connection that MNSO must own Labubu. And if it's a white hot fad, obviously that can just die out as quick as it was. Okay, good. Well, yeah, that doesn't sound like something you should say, but or at least be more tactful. Market that. If it is for poor people, just why can't you just say, look how cost effective our amazing food is. If you're on a shoestring budget and you can't afford the luxury and the quality of top shelf foods, come to Campbell's, because our food is hidden luxury. It's hidden top shelf. People don't know it, but we know it, and we're going to give you a quality product for a budget price, right? Something like that, but you don't say it's just for poor people. I know it's recorded, but you deserve it then. You deserve it. Schlumberger coming at you. How does Ian do it? On the screen right now. Schlumberger. If I can find what the heck I'm doing. Oh my God. You can do it. You can do it. Share screen. There we go. You did it. You're so smart. I knew. Look at me, Ma. Look what I did. All right. Look up SLB. We'll go to Simply Safe. It was Schlumberger SLB, right? Oh, I thought. I'm not even going to be able to spell it. Somebody put in the. So I'm bumbling around like a fool looking for Schlumberger. I thought it was SLB. I guess it's not. But this is in the oil and gas equipment. Oh, Jesus Christ. It is. Boy, here we go. Just keep reading, buddy. You can do it. Schlumberger is an oil field services giant that helps energy producers operate more efficiently. 3% yield, maybe undervalued. Slow dividend growth. I see they have a big cut there heading into the COVID year of 2020. I don't believe that they are an MLP, right? So they got a dividend upgrade in 2020, oddly enough, after they slashed the dividend 75%, which was their first cut in more than 40 years. When a barrel of oil was negative, right? That's when they cut. So they are way below. And look at that. They had a frozen dividend for a while. So raised like crazy, froze it, and then cut. And that's why you always got to watch out for any company for those frozen dividends after they consistently raise it. So it's still way below where they cut it from. But see if we can get any interesting in here. Free cash flow payout ratio, that's nice. It's been declining. And there you go. That's why they cut it, right? Look at that. When you're, and this is why I preach and say for both, well, free cash flow payout ratio, first and foremost, if it's above 100% for more than a few years, the dividend's going to get cut. It's just not sustainable from what I've seen. And then earnings payout ratio, both payout ratios are above 100%. And that you can't sustain that. When everything and then some is going to the dividend, it means that you're paying for the dividend with either savings and or debt, a combination of both or one of the others. Neither is good. Neither is good. You'd love to be passing through profits to the shareholders, right? You don't want to be paying them from retained earnings. That's not the way to do it. So for cash flow per share, nice. It's come up, but I don't know. We'd have to dig more into this company and understand exactly the business. I'm sure it's obviously cyclical. They still dilute shareholders. I don't know, man. Maybe if you're going to try and buy it for it to come up a little bit, make a little bit of net debt's coming down. That's good. So it just looks okay. And let's see real quick what the quant says about Schlumberger. Gives it a hold. Analysts buy and Wall Street says strong buy. So Fluids Doc says this is the meeting the Red Queen moment. And there you go. There's a few buy, strong buy. Too cheap to ignore by the turnaround from October. Take that what it is. There's some opinions from people who have reportedly done their homework. Next, we had international paper for you, Jack. The quant gives it a hold, but the Seeking Alpha analysts and the Wall Street analysts give it a buy. Damn, international paper. Why did they get so hard over the last year? Down 32%, 20% the past 5 years. So even if you've been in this for 10 years, obviously with the dividend, you will have been on the plus side, but the stock price has gone nowhere in 10 years. All eyes on the balance sheet. David Desjardins says, all right, well, what was the reset? Weren't they used to be a REIT, right? And now I think there was something about that. They either became a REIT or went from a REIT. Or maybe I'm thinking of Iron Mountain. Anyway, let's see what we can find about them on international paper. It's paper. Feel it, touch it. That's a quote from one of the worst movies I've ever seen. It's Waterworld. That was about the best part of the movie was the goofy guy who was all hyped and jazzed because he had paper. Because in a world that's covered by water, where do you get paper from? It's incredibly valuable. Hey, there's a future some of you may not have considered. Just start stockpiling paper. Because what are you going to do with gold? You know, I guess people want paper. Yeah, they produce container board and corrugated packaging. They've been getting dividend downgrades since 2024. Yucky. Cut the dividend. It's been frozen. I don't like to see that. I don't know if there's something to do with if they switch from a REIT to not being a REIT. Let's see. Could be undervalued. Let me see their metrics. If that can give us a little bit more. Free cash flow payout ratio negative 308%. Yeah. We would need to know. And this is yucky. Icky bucket of yuck. Since 2020, their free cash flow has been declining and then it went negative the last 12 months. A lot of problems with this company. Sales jumped really high over the last 12 months, but they also increased their shares by a whole hell of a lot. Yuck. Margins all compressed and garbage. Not for me, man. I guess you're going to be waiting for the turnaround. At least their net debt is down, so. But their interest coverage ratio, oddly, is less than $1. Less than $1 of operating income to cover every $1 of interest on the debt. That is razor thin, and I would not be surprised if they cut their dividend again looking at this. So not for me. And then what do we got? One more MZTI, if we can find it. Marzetti Company. Ooh, Marzetti. That sounds familiar. Who shared this one, Trevon? Dude, Marzetti. This is a business I can understand. Oh, did they change their name to from Lancaster? I remember a while looking at a Lancaster. New York Bakery frozen garlic breads, Sister Schubert's dinner rolls, and Marzetti salad. That's what I know. The Marzetti salad dressings, croutons, dips, and pasta. They produce dressings and sauces for Olive Garden, Buffalo Wild Wings, and Chick-fil-A. Wasn't Buffalo Wild Wings public once upon a time? Or going to? All right, let's see here what they... That looks like a roller coaster ride getting ready to hopefully never drop, right? Perpetually go up like that. Wow, that's pretty cool. They're very consistent with their dividend growth. Like you said, Dividend King, 62 years of raises. Hey, pretty nice dividend. Right? Inflation beating. Yeah, 10-year CAGR of 6.4 and 5. So their dividend has been beating inflation. But we need to know why the market thinks they're this below their historical valuation, why they have come down. Hey, free cash flow payout ratio, man, it's still low. Numbers look good so far. Free cash flow per share could take a hit next 12 months. Obviously, that's projected. Nobody has that future data. Yeah, this looks for a consumer staple company. You're not going to see NVIDIA type numbers, right? Just they're stepping its total sales up and to the right every single year. And they do not bank shares at all. 27.4 million shares outstanding 10 years ago, 27.5 million shares outstanding right now. Hey, good margins, healthy margins. You know what? Apparently they have no net debt, which if that's true, fantastic. Yeah, that's fantastic. Marzetti Company, we'll see what they do. We'll see what Simply Safe, Seeking Alpha gives Marzetti Company. You gotta give Marzetti Company to the chopper. All right, we have fun here if you can't tell. It's called Dividend Investing Hour with a Complete Lunatic. Down 10% this year, though. Quant gives it a hold. 42% up over the last 10 years. You see what Daniel Jones strikes again when he's not playing quarterback. I heard in between during halftime when they think he's looking at the game film, he's actually researching companies like Marzetti so he can post on Seeking Alpha. So Daniel Jones gives it a hold and says it's looking tastier. But a lot of holds and sells. So, Lancaster Colony, they changed their name or they merged. So, I don't know. Is that what happened? Somebody let me know. Somebody let me know, my God. And last one here before we jump back. This is the Labubu, right? Miniso Group Holding. Hold. Strong buy from Wall Street. A lot of buys. I'd be shocked if I saw Daniel Jones again. So you get some buys. Same guy. Edis Zizis. That sounds like James Bond villain. So this company doesn't get a lot of coverage, but there you go. So a lot of strong buys and just for our own. We'll see what's going on with them on. Come on. MNS. So not the number. Oh. Hey, he did it. Miniso. When were they founded? This is a foreign company, obviously, I'm guessing. Founded in 2013, and they're based in Guangzhou, China. Is it wrong? I don't know. Yeah. Okay, they raised the dividend a lot, but they just started paying one. It's an annual dividend, 60 cents a share. I don't know if this is accurate with China. If it's true, their dividend free cash flow ratio 139%. I'm not going to spend too much time on this because I'm skeptical of the numbers coming out of China, but I guess it looks okay if you're buying it for Labubu. I don't know. Maybe it'd be better just buying Labubus and trying to sell those on eBay or something. You might do better. Good. I'm back with all y'all. Hey, if it weren't for the bees, I hear we would all be dead. We need the bees on this planet to live. Is that right, Kevin? Okay, good. I'm glad you guys like to see the different companies and whatnot. And I figure I caught myself. I'm getting better. My wife usually will stop me because I'll say I figure, but it's figure, not to bust my own balls. And this is indicative too that it could be better to just invest in the Labubus and sell them. I don't know. Snowball Analytics. I think I'm an ad affiliate for it, Kevin. I used it for a while and then I just, you know what it is? It's just too many damn things. I don't know how Ryan does it. I can't keep track of all these. I would literally spend my whole day just keeping track of all the things that, yeah, so scrolling through what you guys said. Welcome as a Portuguese guy. I know 0 words in Portuguese. Yeah, with Funko. Yeah, I'd stay away from fads. But that's, you know what, Steve? It's interesting. I don't know. I don't think Build-A-Bear really buys stuff, but I could see that happening. Yeah, that's a good one. That's a very good one. Build-A-Bear was. Missed it. Oh, come on, Doc. What's up, man? Waterworld. Yeah, I know. Isn't that funny? And that's what you never know. Somebody's jumping in right as soon as you're telling a silly Waterworld story about paper. Yeah. Doc, you entered Vici. Yeah, we were just talking about the interest rates. So if they don't raise rates, then you could see a little bit of a sell-off in the REITs. But as we said, when rates drop, REITs, higher yielding dividend companies usually move opposite to the rates. When the rates go up, people want safer investments, right? They call it the risk-free rate. But honestly, is it really risk-free? Because your money is going to be tied up in that investment, in that vehicle, and it's not going to appreciate like it would. The dividend's not going to grow. So, oh, that's fun. Doc, I did see that on a screener, Rolls Royce. They're doing something with, I forget what they're doing something with. I'll look them up. FinViz. I like FinViz, but it is now called fiscal.ai, right? I've been using it in the videos. Actually, I'll show you guys something real cool. Let me punch in FinViz because I want to show you something you can use for free because I don't pay FinViz. Oh, FinViz. No, I know FinViz. Yeah, FinViz is yeah, God, I've been using FinViz for a long time. I don't know, I've never used the Elite, but I guess I'll show you guys. We'll go to FinViz here. I was thinking it was here. This is FinViz. So I do see they have a off Elite. So you can do screeners and it's very, I haven't used it in a while. There's a lot of, well, let's, if we click on here, let me do something. I'm going to use Kinsale. there's a lot of things you can search for, and yeah, one thing I like, it's an easy place to find the insider ownership. Kinsale, I like that. Could be higher, but 5% of the shares outstanding is owned by management. Dang it, I didn't make myself smaller here. Someday I'll get this setting right. But there's just a lot of good, useful information. But what you guys might find more helpful, and actually use this for groups. If you click groups, you can. It's a fun place, and you'll see people put this in their content. But you can see the sectors over the past. What was that, day, week, month? So technology is the worst over the last month, 3 month, half year, and 1 year, and then year to date. But yeah, it's kind of cool. So if you click on tech, it can get pretty in depth. You can do all kinds of screens and look for some of the worst performers or the best performing in the, put in your own metrics. So there's the groups. And then I think Maps does the heat map. You'll see people share. Hello. Weird. I wonder if it is mine. I wonder if I was glitching there, because interesting. So my internet didn't pop up right away. Might be a time to reset the router. But yeah, if you do the maps, it'll show you the heat map. Yeah, but let me show you fiscal.ai. So, I have to share this. I clicked on a link. You didn't see it here. Jesus. Here is the heat map. When you click on maps, it will show you the companies, and then you can scan over and blah, 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 and all that stuff. So you'll see people share these heat maps. Easy way to create content. You can just screenshot that. But something I've been playing around with on Fiscal AI, and this is free. I don't have an account, but I don't have a paid subscription. And I'd consider it because I want to show you something. So here, the numbers I use, we'll go back to Kinsale. It's a lot of information. And let me zoom in here. But you will see this is where I share the return on capital employed, the 5-year average. I like that. I like those averages. So a ton of information. They'll give you their AI overview of what's going on with the company down here in the lower left. But if you click financials, and this is pretty cool. Now, I'll start with ratios. Click on the ratios tab. Yeah, you guys can see all this. We will click on here, price to earnings, right? Or there's just a lot. Here's dividends. I mean, you want to compare a bunch of things. I don't know. Here, dividend yield, click on that. Payout ratio, click on that. And then up top, you get that. Look at that. Those two things you clicked on. And then you can use the wheel there for graphing lines. And here I toggle the median for payout ratio. And this is Kinsale, right? Yeah, Kinsale. So their payout ratio, and then the median, or here. And then see the orange, if you go over, you can toggle it to, I won't do it as a bar chart. Some of them, here I changed the payout ratio to a bar chart. I mean, it is just really impressive. And then you can download this. And the thing, though, that kind of stinks we could be here all night. They have a buyback yield, price to free cash flow. That's the one I used it for, was PE. So if you guys saw that, here, you could use price to earnings and then overlay it with the payout ratio if you wanted to. But if I turn off the payout ratio, now we just have the PE, the little wheel there to toggle the median line, and you can see that it is below their own median for the last 10 years, price to earnings. Really handy. But the thing is this, you guys can still see this, right? You zoom in. This segments and KPIs, the key performance indicators, This is what they block. They want you to pay for this, but let me do an easier to understand company. How about Apple, right? That was up there. Apple. So we're on their segments and key performance indicators right there. Look how awesome that would be. iPhone revenue, Mac revenue, iPad revenue, American revenue, Europe, China. I mean, iPhone installed user base. So if you wanted to see, again, their iPhone revenue, we can only get, let me zoom out. I can only get 2 years. That's what they give you for free. They want you to upgrade. So how cool would that they would go back to September of 2012 and give you all that data that you could overlay that with revenue and how this is just the iPhone revenue, and you can do it for products. So this is really, I'm almost selling myself here on it, but I just think it's amazing that you can get all this. And here, Netflix is one that what's key for them is their subscribers, right? You want their subscribers, their users. Canada, EMEA, that's what Middle East, Europe, Middle East, and Asia, Latin America. So you can, Christ, look at that. Look how in depth this is. This is nuts, guys. That you can do the United States and Canada paid membership net additions going back, and you can look at all these trends and total average paying memberships. It's impressive. And I don't know, what do they got? A 30% off any paid plan. Let's see how much it is just real quick. So yeah, for Pro, it'd be $27 a month. But you know what? I think they tell you, I don't know which one gives you the 3 years of here. Yeah, that's what we were looking at. 10 years and 15 quarters of KPI data, 20 quarters of 15 years of financials. So anyway, this turned into an infomercial for fiscal.ai, but oh, it's better. Sorry, I just saw something popped up that said my browser lost connection. Oh, I hope I didn't. But I was looking at my phone. It was still on there. So anyway, yeah, Charles, I don't know. Next week I'll reset the router, and man, I don't know. Maybe that'll be my Christmas gift. I'll get a year of FinViz or fiscal.ai, because that would be crazy handy researching companies to see the trends of their segments and the key performance indicators, right? I mean, you guys saw that, I hope you saw that. Look at that. You're right. We need the bees. God bless the bees. I love them. I didn't even realize, Jack, that whole rant started. You had called me Ross. You're calling me my God-given, well, no, God-given, my government mother-given name. But yeah, I don't know. What do you guys think of fiscal.ai? Would you ever pay for something like that? Maybe I'll pay for it and see. I think I have how much longer till this sale's up? 1 day, 3 hours remaining to save 30%. So do I want to spend $27 a month for a year? You know what? I might just do that. That would be putting back into the channel, because I think I've told you guys, I make about, on a good month on YouTube, it'll be pushing $150. On a bad month, it's right over $100. I'm not retiring on that. I'm not, yeah. So I think maybe I'll do that. You guys may have just watched me do an infomercial to myself and sell myself on using fiscal.ai for a year, just so I can get those charts, because that would be very helpful in videos and researching companies and looking at the trends of their products. And I guess that it would do it for the Labubu one, right? It would show you that trend, which way it's going. So very helpful, because again, those for Netflix, for the iPhone revenue. That's what's going to drive the company, right? So if the trend is flat and starting to drop, company's going to have to do something. And that would be very, very, yeah. So I might just do that. Take advantage, 30% off, So, hey, Papa here worked what? Pushing like 14 hours of overtime this weekend. So that will pay it for in and of itself. So my tea has run out and our time has run out together. But also William, somebody like me that's doing this as a hobby and sharing the analysis, I'll sleep on it. I have a day. That's something you should remember. I tell my kids, I'm telling you, sleep on your decisions, your purchase decisions for a day at least, 2 days if you can, because you may feel different about it. Unless, I don't. Thank you. Thanks, everybody. I do appreciate that. Enjoy your week. Let's see what the Fed does with rates. I'll be here again next week to chit chat with you and say, what are you buying and investing in? So thanks again. So long, everybody.